Welcome, everybody, to a new analysis of Tradomics. This is kind of a special episode because, beside analyzing, as always, our US indexes, in order to better understand what I will be talking about, it's kind of important to have at least an understanding about the T cycle analysis because there are some special market fakes moves that are called Bayer tongues that sometimes I mention in my videos. But in order to understand it, it's important that you go to the link here on the pop-up banner on the right-hand side, Introduction to the T-cycle analysis, because without having such basis, you will not understand what I will be talking about. As a matter of transparency, as always in this channel, I always take the errors that I left in my previous analysis so that you can compare episode by episode what I was talking about and what the market has done. And I have no fear to challenge myself every time I issue a video, publish a video, because I'm confident about the duration here that I have studied for years, where when I set up the T cycle analysis. Okay, so let's dig in for the Nasdaq 100 index, and let's talk a little bit what has happened in the short term. But then we will move to the long term and we will define why this error is not happening. Okay, so first of all, in the last analysis, I was saying that from this top, we have had the possibility to start a new cycle. It was a T+2, but now I just change a little bit for the say for a matter of time the segmentation. From this top here, we don't have just a T+2 monthly cycle, but we have the beginning of something really big. Something really big because we went to lower this low. But here I can leave the T+3, T+4, or eventually I can just leave a T+4. So this is a 6 months upward cycle. At least the 6 months upward cycle take at least a monthly upward cycle for its development. We have done this first T+2, but now we are pushing the price so much, so low that here we might have the beginning not just of a T+4, a 6 months cycle, which has a duration between 94, 168 days, but even a T+5 or even a multi-yearly upward cycle. I will talk about that in a moment. I was forecasting here the closing of this weekly cycle. We have had just this candle here, and this candle here happened after 8 days. So if we gauge the duration, we have 8 days. So from this top, the candle of the Friday 28th of February, we started a new weekly upward cycle. So first top here, then first stop here, then a new weekly cycle. So over the short term, analysis was correct, I have to say. So we can remove now the arrows. And we have had from the desktop on the 19th of February until the top of the 24th of 25th of March, a total duration of 24 bars. So we have developed the first T+2 upward cycle. The other flip of the coin here, this swing is an important one because from this low here we have at least a T+3 or even more than a T+3, T+4 downward cycle. But this downward cycle has turned into a negative one. A negative cycle means that the low from which it started, in this case downward cycle, was broken before the minimum duration of the cycle itself. If we have the T+3 that has a duration between 48 to 89 days, that low was broken with the candle here on the 3rd of March, so well ahead before its minimum duration after 33 bars. Therefore, we can expect further downtrend, so the price will go into the direction in which the low has been broken until the minimum, medium, or maximum duration of a T plus 3, or even worse, a T plus 4. So we can expect to continue the downtrend until minimum duration of a T plus 3, which has been already achieved 58 days. We can extend the duration until maximum duration 89 days, so until the 20th of May. But if in that case we have a T plus 4, then we can go well beyond until summertime. But nonetheless, talking about downward cycle, here we have the beginning of a T plus 5, and this T plus 5 yearly cycle now is negative because thanks to yesterday's candle, we went to lower the low from which the cycle started. And if we gauge now the duration has achieved 168 bars. But a T plus 5 at least can last until 189 days. So we can expect further downtrend until the beginning of May in the best case, 6th of May. But if we have a median duration of a T plus 5, then we can extend further the downtrend until summertime. So this would be until June, July, and so on. So now you have to be really careful to open long position because we have a strong volumetric tendency. But at least with this news that the market has given to us, apart Trump's tariffs and so on, we know that we can expect further downtrend until eventually summertime or even beyond summertime. Okay, so this is the first key message of this video. Why is happening this thing? Um, you know that for those of you that are following me since a little while, I'm not talking about politics, I'm not talking about fundamentals of the companies, I'm not talking about the quality of the earnings, I'm not talking about all the things that you can implement in a fundamental analysis. I have been a trader for many years and I used to follow the fundamentals and I do it for work, for my job. But I realized at a certain point in time that if you wanted to really make money, then you don't have to follow the news because these are biased by opinions and you can interpret the news as a good news or a bad news and you never know exactly where the price is going. And in order to make money, you need to forecast in advance where the price is going to correctly manage a short or long position. That's why here on this channel we have a data-driven analysis, focus on time, so you can statistically predict at any point in time which kind of pathway the price is following or will have a tendency to follow in the future. That's over the short term, mid-term, and even long term. Now, in order to explain what is happening here, we have to zoom out the chart and we have to start looking at the Nasdaq index over the long term. And particularly, we have to go back and take a step back. We have to go back in time from, I would say, this low here that happened on 20th of December 2018. Now, given that we have important rules that needs to be abide also for the HFT, high frequency trading, the algorithms that are playing an important role by moving, let's say, or by determining the price moves every day in the stock market. Time is one of the most important parameters that they have in order to start selling bunch of stocks. And if we take this low here from the 20th of December 2028, you see that we have a multi-year downward cycle that has happened exactly on this low. Why that? Because in this case, If we go back to the law on the 13th of February 2028, here we have a T plus 5, which is a yearly cycle that is negative. And the T plus 5 negative can close another multi-yearly cycle. And in order to close a multi-yearly cycle, in this case a T plus 8, so a T plus 8 is a 10-year cycle that of course started well before, we need 3 degrees less negative cycle to close any cycle. So if here we have a T plus 8 and here we have a T plus 5 that is negative, here we have the condition to close a 10-year cycle, okay? And from this law here, we can see that we have a T plus 8, okay? 10 years cycle. And that's the rule of the cycle analysis. So whenever there is a closing of a cycle, you need at least a sufficient and necessary condition of a sub degree of 3 degrees less negative to close or to develop the tail of um, a bigger cycle, a cycle that has 3 degrees more. So if you have a T plus 5, in order to close a T plus 5, you need a T plus 2 negative cycle. If you wanted to close a T plus 4, you need a T plus 1, so a bi-weekly cycle that is negative, and so on and so on. Okay, now if we look at this thing and we have here the first T plus 5, then we have another T plus 5, then we have another T plus 5 plus a Bayes tongue. So here we have a sequel of different cycles, and here we have a T plus 6, okay? So first T plus 5, then we have one T plus 5 plus another T plus 5 plus a Bayes tongue, and this is a T plus 6. So we have a 1-2 cycle, then we have a Bayes tongue, and the Bayes tongue is always 3 degrees less, like basically the tail to close a cycle of a 3 degrees more. And then we have a T plus 6. So this is a Bayes tongue, which is a market fake move that extend or prolong the duration of the cycles, and by definition, it has a 3 degrees less. Okay, so first yearly cycle, then bi-yearly cycle with a Bayes tongue, and another multi-yearly cycle. Okay, and what we are talking about here is the Bayes tongue. So you see also in this case we have had a T plus 4 Bayes tongue between a T plus 7 and another T plus 7, which is approximately here. Okay, so we have had, now I don't have the segmentation, but we can say one first here, second here, third here, fourth here, extension T plus 7. A T plus 7 can last between 3 to 5 years. Okay, and now in order to understand what is happening, especially from the upward cycle perspective, here is basically the same thing. And the Bayes tongue cannot be predicted because there are market fakes, and you know the Bayes tongue once they are happening, and you have to work backwards to understand whether a Bayes tongue was developed or not. And this is our case. Unfortunately, this is something that we cannot predict. So we have to work backwards. And it's always important to manage position with stop loss and take profit because of this. So we have had here from this top a T plus 7 multi-yearly cycle divided by first 6-month cycle upward cycle, second 6 months upward cycle, third 6 months upward cycle. This was a T plus 6. So 2 years a cycle. Then we had another yearly cycle, T plus 5. And you can always gauge the duration. So from this top until the top here, July, 24th of July, 417 bars. So which is more than a T plus 5H for 380. When we have another T plus 5 yearly cycle here, 245. This is standard duration. But here we have a T plus 4 Bayes-Tongue, because if we gauge the total duration, we have 398 days. So this one cannot be a T plus 5, and it cannot neither be a T plus 5 hybrid cycle. So this one is not a T plus 5, but unfortunately, it's a T plus 4 Bayes-Tongue. So it's an extra time that was done in order to extend the duration of this T plus 7 and start a multi-yearly cycle. And I can already tell you this is a multi-yearly cycle. So basically, we cannot return back to this top for at least a year. At least. So imagine how long we can continue to fall, or for how long. So having a V shape from next month, it's something that extremely unlikely to happen. Okay, so this is why, unfortunately, you have to work backwards. As I was saying, the arrow was not correct, because if here we would have had a T plus 5, then we could have continued to update the tops, as I was saying in the different videos, until 189 days at least. But 189 days would have been 9 of April. Okay, 9 of April with prices in this area. But the top we achieved was um, ahead, was done before, so was done on the 18th of February. So you might say, okay, so it's not a big fail because it's 25 days before what you were saying at least. But truly, this is a Bayes-Tongue and a fake move that provoke this shape. Okay, now I will also talk about the downward cycle, and I know this is a little bit more a longer analysis compared to the other ones, but then all the other indexes are in the same so they are aligned and they are synchronized. So once you look at the Nasdaq, you will understand all the other indexes like Standard & Poor's, Dow Jones, and so on. From the downward cycle perspective, we need also to close what? We need to close this multi-yearly cycle. And in order to close this multi-yearly cycle, if here we have a T plus 8, we need at least a T plus 5 that is negative. And this is a condition that we already have, by the way. But we are in a condition in which we are at the beginning. So we need to continue falling at least for 189 days. So here we are 168 days, and we have to continue falling for the entire month, or we can have bounce of a dead cat and then return to the absolute lows. And this pattern can last until at least 6th of May, if not more. Okay, so we have to close this multi-yearly cycle with a T plus 5 that is negative. So we have to continue falling for another month at least. What about the targets? So the targets, you can basically have a Fibonacci retracement line. I actually was looking at this Fibonacci retracement line from this low here, because we had some pushback from this first level. But then yesterday we went to definitely lower the 38.2% of Fibonacci retracement. So potentially from mid of next week we can have a bounce, but don't be tempted to start opening long position on a bounce. as far as they are over the short term or intraday. Yes, you can do that, but here the pathway is quite straightforward. So the one of the good level that we can achieve, it's 16,290, or I have some levels also around this area, but then we can go also at 14,879. If we then take the Fibonacci retracement here, which is a T plus 8, well, if we look at basically the long term, the second level would be this one at 16,068, and then the other one 14,112. We can fall for long. Okay. So that the situation we have. I have also some other intermediate levels. Here we are going really fast into a death cross, and over really the short term, so that you have all the information. Over the short term, you might expect a bounce back to the upside by the beginning of next week. Let's see. So here we have this is potentially a T plus 2 that is already negative. And in order to have a bounce back to the upside for the beginning of another T plus 2, eventually, if there will be the strength to do it, is that we can have the bounce to the upside from the 11th of April onwards. Before the 11th of April, forget about it. Okay, forget about a consistent bounce. But we will have also to see the volumes, because here the bounce was not so big. Okay, and if after the 11th of April we will not have a bounce that will define a low, and we will not have a bunch of at least 9-10 candles below above that low, then we will not have even another T plus 2, but just a T plus 1. So smaller cycle that will do a shape of this kind. But now it's let's say too soon to say that. For the next week, we have had the first weekly cycle here that was closed after 8 bars. Then new weekly cycle, negative cycle, that was closed after 6 bars. Then here we have already a negative weekly cycle. Okay, this negative weekly cycle has achieved a duration of 4 or 5 bars. So beginning of next week will be again to the downside, or maybe we can have in the best case scenario bounce already from the opening, but then we need to return to the absolute lows until by Monday or even Tuesday. So a safe, let's say, if you want to do intraday operations, a safe, let's say, threshold would be, but safe, let's say, more probable. So the period of the week of the next week to have a more likelihood to have a bounce will be from Wednesday onwards. But Monday and Tuesday will be definitely hard days to start opening long position. From Wednesday onwards, you might start thinking to do just intraday session only for pro traders. Okay, so that's the situation we have on the Nasdaq. If you have followed, or if you have had the patience to follow this long analysis, you will see that all the others indices are in the same situation. If you have had the patience to follow the entire analysis on the Nasdaq, here we have basically the same situation. On the Standard & Poor's, actually, we did not have a bear tone, but because we have not seen the condition to have a T plus 5 from this top here, so we have had just a T plus 4 with a series of T plus 2, then a T plus 3, and then here the last part of the cycle before starting something new, but at least this is a T+4 or T+5. Now, here we have the same situation as for the Nasdaq because this is a negative cycle. This cycle has all the condition to be defined as a T+5. We broke down the low at 168 days, therefore we can continue falling until 189 days at least, so until 6th of May, but we can of course extend the duration up to 339 days. In that case will be the worst case scenario because we can continue falling until October, November. If we take a median duration, we can fall until 1st of August, 249, 250 days. So be really careful to bounce off that, cats. We have here a T+2 that is negative, and of course we have the same situation as for the Nasdaq. So the beginning of next week has a high likelihood to continue falling down, because here we have the weekly cycle that has achieved a total duration of 4 days, not even 5. So this is the 5 one, but I cannot count it for um, if we have a new weekly cycle. So I have to take the last one before the lowest, so 4 days. So here before, um, let's say before Tuesday, we will not be on the safe side to eventually open intraday long position if you are a pro traders. Otherwise, um, we have so many chances to screwed up our long position even on intraday trade that is not savvy. Okay, so eventually from Wednesday onwards we might see something like a bounce back to the upside, but this is not going to last too much because we have this T+2 that is negative, and therefore we keep falling according to the duration of the T+2, which is 24 days at least, up to 44 days, and 44 days worst case scenario will be achieving the duration of the negative pathway by Wednesday 14th of May 2025. I also tell you that earnings released from the companies by end of April will not change too much the pathway. If the algos are in selling mode, then they might have some perturbation. Then of course you might see bounce that might achieve 2 plus 2, 3% in intraday because we have a VIX that is more than 45 points. But they are traps. So be careful what you are doing, what you will be managing in the next weeks slash months, because here we have a strong tendency to the downside, and you can, with the Fibonacci retracements, also calculate your targets that I have given to you on the Nasdaq. But we have a condition in which a multi-yearly cycle from this top can be developed. Therefore, we need to fall harshly because we need the room then to develop the cycle itself, and we need a certain amount of time um, in which the price will stay lower the top that was achieved on the 19th of February this year. On the Dow Jones, we have had this move, and this move took see 18 20 days. This was a T+1 upward cycle, and then we started following, we started, the harsh downtrend also in this case. So here we can remove all the arrows because we went so low that these are useless. In this case, on the Dow Jones, we can keep this top as T+4, but now we can also say a T+5 without problems. We have a T+3 that is negative. We have a T+2 that is negative. We have a T+5 that is negative. So basically, we have the same situation. So we can keep falling until May and beyond. If we gauge the total duration even on the Dow Jones, we have 100, maybe 68, let's see, 167. So they are all synchronized. All the indexes are synchronized um, for the sell-off, and it's not the case, of course, because with such downtrend, you cannot expect that the Dow Jones falls and the Nasdaq stay in an uptrend and vice versa. Okay, so here the same situation. We can keep following until beginning of May and beyond. So be careful to long position. We move quickly to the last one, which is the Russell. So on the Russell, we have at the Bayer tongue like on the Nasdaq here, and from this top here we started a new at least yearly cycle, which might be definitely more. We have at the first T plus 2 upward cycle here, and the Russell started the downtrend before the Nasdaq, for example. So it was anticipating this move because we started falling really before. And why that? Because here we have even room for closing a T plus 3 months upward cycle, something that has not happened yet, neither on the Nasdaq nor on the Standard and Poor's nor on the Dow Jones. And here we have 80 days. But from this top, we started a new T plus 3. And as you can see here, we have an harsh downtrend. On the downward cycle, we have similar situation. So we have at time already to have the first T plus 2 negative and the second T plus 2. And here potentially there is another T plus 2 slash T plus 1. But what is important is that the T plus 5 is negative, and therefore we can continue falling for the duration of the T plus 5 itself. Here we have 169 bars, so at least we can continue falling down for the entire month until the 5th of May 2025. So even in this case, the Russell is aligned with all the others indexes. So this is all. We have same thing for the Nasdaq and the others. So this is a weekly cycle. We have 4 days. So before Wednesday next week, not savvy to open long position eventually for the intraday, only for pro traders. Otherwise, it's better to start. It's better to wait for a VIX that at least will go lower than 25 or lower than 30. But I'm not here to recommend anything. It's just to let you know that you have to be aware that the beginning of next week will not be brilliant. Let's say apart bounce of that cat that might be also interesting, plus 1 or 2%, but then it's savvy to eventually to seize the opportunity to have this bounce for opening short position eventually. Okay, so that's the situation we have also on the small cap index. I hope this video has given you a lot of insight. If you want to know more about our analysis, you can subscribe to the channel to be notified as soon as possible. If you like the analysis, you can put a like. If you have some questions, feel free to comment. That is all, and I wish you a very nice weekend. Thanks for watching, and see you to the next episode.